So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome to the Build to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling your wealth and compounding your life starts every single day with a mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth and life so you can give more all of it away to help MVPs. My name is Brett Swarts. I'll be the host today, and each and every episode we're joined by some of the world's top entrepreneurs, millionaires, and billionaires, where they share their story, wisdom, and insights with us so we can all level up and compound impact. I'm excited about our next guest. He's out of Colorado, and he is the founder of Emerge Counsel and was the founder and general counsel of Scholar Centric, a groundbreaking educational technology startup for 7 years. He built the company from $0 to $1 million revenues under a lean startup budget before successfully negotiating an exit. He was also a senior attorney for a Fortune 50 tech company. His combination of legal, entrepreneurial, and corporate experience gives him a unique focused perspective on what entrepreneurs who are starting, growing, and exiting their business need to protect their interests. And I'm so excited. Please welcome to the show with me, Mr. Steven Weigler. Steven, how are we doing?
Hey, everything's good. It's good to meet with you, Brett.
Yes, grateful to have you. And for our listeners getting to know you for the first time, would you give us just a little bit about your story and your current focus?
Sure. So I, like most attorneys, I went to law school, and I really had a passion to be a prosecutor. And so actually was a prosecutor in Miami, of all places, and really realized it's just a good studying career. I did everything to really go into criminal law, and I went into it and said, well, this isn't really what I thought it would be. And quickly transitioned into technology and got a tremendous amount of experience working for AT&T. At the time, it was telecom was really transitioning, and I got a experience in both technology and brand, and realized that, especially when you're selling kind of agnostic goods, like it doesn't really matter, that brand, putting something around it, a brand of reliability, like what the AT&T brand kind of stood for, it turned out to be their most valuable asset. Regardless, AT&T got bought. I was fortunate enough to get an exit package, as long as it wasn't, and they had a package, and part of the package was, we'll give you almost $100,000 to start a business, as long as it's not a franchise. And so I really had an interest in predictive analytics, started a predictive analytics focus on school districts, and forecasting whether students would drop out or not long before they did, using some predictive analytics that I licensed from the University of Wisconsin. So through that, I was really able to get a lot of experience in licensing IP, bringing IP to market, again, putting a brand around it, selling business to government, which involves a lot on really difficult to predict cash flow.
Got it.
And so through that experience, the good, the bad, the ugly, I had to raise a lot of money. I had investors. I had partners at some points. I had to work with school districts. I really learned a lot about how to manage a really difficult business. Ultimately, the company came really close to getting bought. It didn't. There's a crazy story behind that. But it didn't. And I had to really dilute myself to the point that I was kind of irrelevant, and got kind of tossed out of my own business. And so I really, through that experience, learned the good, the bad, the ugly. Thus, about 10 years ago, founded Emerge Council, which is really focused on how to build businesses that without having to go into triage. Um, really
Excellent.
looking at key kind of decision points that
Yep.
every business in a growth model has to make, and really making them right. And so,
Okay. Yeah,
go
let's
ahead.
dive right into that, right? So this is key. And by the way, if you want to learn more about Steve, you can go to emergecouncil.com. I love the background and the diversity within your entrepreneurial experience in corporate world and attorney world and all the things, which positions you very well for what we're going to talk about, which is building a saleable business. And so, Stephen, what's the number one secret to building a saleable business?
Number one secret is always, I don't know if every one of you has gone through due diligence, but always be looking at those questions that are common in the due diligence process from early stage on, and build a business through reverse engineering that can make it through the due diligence process.
Okay, excellent. So the number one secret is to always be looking at the questions that a buyer would be asking during the due diligence process to buy your asset, or the lender, whoever's on the other side is going to be providing the capital, and then reverse engineer the spots in which either you're not clear on or don't have a good answer. Is that a fair summary so far?
Yeah, absolutely.
What's the number one biggest mistake in that process that a entrepreneur you've seen? Like, which one are they just, it's just the lowest hanging fruit and they're just missing it? And like, if they just asked themselves this question 5 years or 10 years ago, before they're selling today, it would have made all the difference. Is there like a number one that really sticks out?
Yeah, that's a really good question. And it's kind of what I focus on a lot at Emerge Council. A lot of businesses either get for example, a trademark, which is the way to protect your brand. They either get a trademark, or they never even thought about getting a trademark, but they kind of do it at the beginning and then forget about it. And then when it comes time to answer all those intellectual property questions, have you copyrighted your marketing collateral? Do you have any trade secret protection? Do you have what's your brand protection scheme? What's your plan? Number one, it's not documented. It's not even thought about. And that's a good, I'd say, in due diligence, when it comes to legal due diligence, it's at least 1/3 to 1/4 of the questions. And they never strategized and never planned. And you take that and you carry it on to contract review, how you are, the contracts that you have with your supply chain, if you're a supply organization, a goods organization, your distribution agreements, all of that, they kind of, as long as your numbers are good, and I get it. Look, I have a business now and I had a business before. If your numbers are good, that's what you're focused on, and profitability. But behind that, it's really like, is your model that you're selling, does it have parts that you're propping up on stilts and really not a proper foundation? Because they're not going to be able to take that business and run with it if it's built on fumes or stilts. And so,
okay, that's great insight. So it sounds like number two is, or part of that is trade secrets, incorporating of marketing material and contracts, right? So getting all of those dialed in order, and having a process and a system, not just to set it and forget it, but to continue to work through it throughout your tenure of your business. Yes.
Yes, absolutely.
Okay.
And
What's
so,
the next secret to this piece here of building a sellable business?
So another aspect to look at is regulatory compliance. Have you ever looked at the regs in your particular business? And have you ever sought opinions, and really have it backed how you're, for example, booking revenue, how you're taking tax considerations, employment considerations, all those things. It's like, has anyone really ever looked at that and provided? And now it doesn't have to be the opinion of the century, and it doesn't have to be 100 pages, but it should be something that you have kicked the tires on and are not just doing it organically.
Excellent. So regulatory compliance, how you're booking revenue, employment considerations, tax considerations, right? These are all the things that a buyer is going to ask and good counsel is going to ask before they buy. And even a lender who's going to lend to the buyer who's buying the business. That makes sense. Okay, so regulatory makes sense. And what's the next kind of major thing that you want to make sure you do to build a sellable business?
Sure. So the next one is marketing compliance. Is how you're marketing. For example, if you have a trendy business that might focus on tweens or people in their early 20s, well, that can transcend into children. And there's marketing laws called COPA that focus on how you advertise to children. If you're not doing that right, again, you could have a multi-million dollar business if you haven't looked at COPA and COPA compliance, and you're going to have issues when it comes to selling the business. The same holds true to if you're doing any business overseas. So a lot of my practice over the years has increasingly focused on building international relations with other attorneys in other countries. So we can look at the European, and it depends. Supply side is usually coming from Asia, and then when you're looking at demand, the demand for your product, you're looking all over the world. So there's a million things that you can look at international, not a million, but there's a number of things that you could look at internationally. For example, you might have a trademark in the United States, but you're selling to Europe, you're selling to Asia, you're selling to Mexico, you're selling to Canada even. If you don't have trademark protection there, well, that's a huge ding. If you have distribution agreements in foreign countries and you haven't really defined the terms or the choice of law, or the choice of law is wrong, meaning it's just like opening yourselves up to a can of worms, that's a really big issue. And so again, I realize again, a lot of entrepreneurs are looking at the bottom line, and they should. That's number one. But these are all the kind of the things that go behind it to build a good sellable business, and it really makes a lot of difference.
Making sense. Yes. And good. You can learn more about what Steven's doing by going to emergecounsel.com, emergecapital.com. He's got IP law, trademark. He's got copyright, e-commerce law, business legal services, entity ownership and structure, licensing. He's got all the things that I think you're going to be wanting to ask if you want to build a sellable business and have good counsel on your side. Okay, what else comes to mind that I haven't asked you so far that you want to make sure is shared today?
Sure. So there's kind of it's like half of a bell curve on. There's stages where you look at this, because again, how I built Emerge Counsel, which is a little unique, is we handle businesses at all stages. And so early stage, we want to build a relationship and have the business understand where the entrepreneur is going. But as far as the amount of services you need from an attorney early stage is relative, unless you're raising money, is relatively limited. And it really focuses on brand and operating structure. So is it an LLC? Is it a corporation? Now keep in mind that usually a buyer would want to see a corporation, not always, but and so you might want to start that from the very beginning. So that's where like kind of intent and really like understanding where the entrepreneur is in their journey. But that's kind of the first stage. As the business grows, it's important, if you use me or any other attorney, to really have that open-ended relationship where you feel like you can call them. In our case, we never really charge for touch base meetings with the client, because we really want to continue to understand what their motives and what their goals are. But that's when, when you get a new distributor, when you decide to put a distribution team, are you going to do outside sales versus inside sales? All those kind of points are when you need advice from counsel. And so again, it's kind of starts out at a very small, and we have a lot of trademark clients. Again, that's kind of one of our specialties. But then as the relationship grows, we become more like kind of like your outside inside counsel, meaning you don't, usually the last person you need to hire on your C-suite team is general counsel. And so we have a kind of a system and a relationship and a protocol where we're able to provide these services at package prices during every stage of the entrepreneurial journey. And so, but it's very important that whoever you work with, that I can't really do what I do without knowing the client and understanding where they are in their business strategies. Filling out the
Awesome.
paperwork and is the easy part. I mean, sure,
Yeah, excellent.
but it's really understanding what your needs are and understanding where you want to go to create that kind of perfect sellable business.
Excellent. So speaking of when you go to sell the business, right? Massive capital gains taxes. I'm curious, what have been some of the one or two go-to strategies when it comes to exiting and having, either stock, public or private, or big business sale, S corp, C corp. What's kind of been your go-to, or do you have any thoughts on that, Stephen?
Sure. So I'm not a trust attorney, but sometimes we work with trust agreements. But honestly, Brett, I just had one of my favorite clients have a massive exit, and we worked on that deal long and hard. The last thing he was concerned about was the taxes, because I mean, as long as they're capital gains as opposed to ordinary income. But the exit was so good that sure, he's giving money back, but you have to consider, to the government, but you have to consider that in your exit. But he's thrilled, in other words, if the multiple's big enough, taxes become kind of a afterthought. There are trust instruments, but again, there are trust instruments, or taking equity at a low initial equity price point. There's ways to lower your tax burden, and certainly we want to make sure that number one, you have a good CPA from the very beginning, and number two, that our tax counsel connections are solid and can provide advice on that structure. It's one of many things you're thinking about when you're structuring the exit.
Yeah. So I appreciate that. Thank you for sharing that. So I have a company, you may not know, it's called Capital Gains Tax Solutions. And so we find that you're right, depending on the sale. I mean, if you're selling a $100+ million deal, maybe you don't. But we found that's like 20, 30, 40, 50% sometimes, depending on what it's a C Corp, LLC, depending on what the asset you're selling. Most of real estate goes higher than 37% because the depreciation recapture. But that's big. I mean, if you have to give away, 20, 30, 40%, Stephen, of everything you bled, sweat, and tears, and there's a better way, I would push back and say, really? Do they really want to just give it all away? But maybe that's that particular client. Most of the clients we work with, they're like, man, that tax bill is so big. If there's a way to defer it in a flexible way, then it changes the game. I'm curious. The estate tax is another one too.
I'm all for that. Don't get me wrong.
Yeah.
It's number one. I'm generally, how it works is you get a term sheet, and I would bring it to someone like you to look at if there's a better way to structure this deal from a tax perspective. It's just one of many things. But my focus a lot of times is, can we get this deal done? And are we going to make it through due diligence? And number three, is it structured to maximize the multiples?
Yes.
Are we 100%. Pointing out the right things?
I think you're exactly right. You want to niche down for sure. And it's the same thing we do. If someone comes to us and they're like, hey, I need a plan for my exit. I'm like, yeah, we can help you with that. But as far as selling it, you need to hire, get other M&A attorney, or, get Stephen to help you, or get, a business broker, whoever is selling it, go get you the highest price. It's a team effort. So
yeah,
the other one I was curious
about, just not my specialty, right?
Yeah, that makes sense. I get you. The other thing I was thinking about is just the debt tax. So sometimes, and now this big, beautiful bill that just got passed, right? It's $30 million now for a married couple that's exempt. But the one that people miss, Stephen, is this 40% debt tax, right? On the estate, right? It's known as the estate tax. So it's like not just you sell, let's say, $100 million company and you pay $25 million, right? So now you're at 75. And then you're 50 years old, and that 75 grows to, $200 million over your lifetime. Well, you're going to get taxed on that $200 million, right? Minus the $30 million exemption, right? 40%. And so there's just multiple layers of just, crushing tax. So we have a strategy, which is kind of cool, Steve, that you might be interested in, where we eliminate that estate tax on that sale of that $100 million company. So immediately. So it's on the sale. You need to take a sale at the close. So, but it has to be at the close with a third party buyer. And then it's forever outside the taxable estate. So we eliminate that 40%. And then we get to defer some of the capital gains tax along their lifetime. They have to pay some as they receive payments back. But just some small things. I find that sometimes we come too late to the game, and like you're in the 12th hour and someone hasn't done the planning, and then the buyer and seller are real close to making the deal, and then it's like I have to work sometimes. And I'm like, I feel like sometimes we're walking on eggshells with some of the deals because all the brokers and all the attorneys on that end, you can't blame them. They're like, hey, we don't want anything to mess it up. But I'm wondering, do you see the value on like the estate tax, the death tax, if you can eliminate that, and what that could mean for like the entrepreneur who wants to start another business and use the capital to go fund another business deal or diversify their wealth, or just rather than the government just kind of just wasting the money away, right? Which is kind of, they do it pretty quickly.
That is really good insight, first of all. And from my perspective, we want to be talking about that early and often on the side of the entrepreneur, on how that money would best flow once you get to kind of the exit. And because you're right, when we're, you're just working on your business, and all of a sudden one day it comes in, or like usually you've attracted some interest somewhere. You're not necessarily shopping for it, but here it is. And then a lot of times, Brett, it's like private equity or roll up or something like that, where they have set terms on how they want to do the deal. And so you have to work really quickly to work inside those terms. And then again, we're looking at like, all right, is there going to be some issues here we're immediately starting to kick the tires of the business and say, all right, well, we didn't do this, we didn't do that, and start like patching it up, and also doing a kind of a marketing, investor relations, almost kind of marketing to say, oh, everything's fine. And so there's a lot to think about all of a sudden, fast and furious. But if you didn't think about those types of things before, that's really can be extremely problematic. And so we always, in my perfect world, I would like to meet with you really early if you're advising the business in the process. So we always have that kind of like, it's almost like a tag team approach, because we know that usually if it's private equity, et cetera, they're going to try and, they already took your tax considerations into account, and we're going to try and pay ordinary income, capital gains, long-term capital gains, if possible, at a 20% rate. And so that's kind of a given. But then what happens then is really, number one, not what I do. And number two, it's like, if we have to bring in someone like at that point, that is really can be way too fast a decision to make, because we're working on like, days, weeks. And so you should always really be thinking about that early on. So if it's, and that goes to, is it an LLC? Is it, how are you looking at it? And again, that's why I don't charge for like these types of calls. It's like, I want to be in on the call with the CPA or the tax planner or your personal, someone like you. It's really important that I understand where you're coming from, and it's essential. Or I'll bring in my own tax person, but keep in mind that that's very expensive to bring in a tax attorney, and a lot of times, again, they do charge many of the times to sit on those calls, because that's what they do. And so we'd rather have someone like you, honestly.
Yeah, no, I appreciate that.
But that's something to absolutely be thinking about. Yeah.
Yeah, we work the same way. We work on a conditional basis, and we do all the planning, no cost, no obligation. We compare strategies, no cost, no obligation with our tax team. And then they decide to use it, great. If they don't, no worries, they don't owe us anything. So we take all that pressure off. The other thing I think about, it can help the entrepreneur retire earlier, maybe 20 or 30 or 40% earlier, right? So it gets their time back, or helps them to diversify, or helps them make the deal. Like sometimes the business is worth maybe only 80 million, but the guy wants 100 million because he's got to pay tax. So it's like, well, but what if you can defer the tax, right? And you can still get 80 million. They're like, oh, okay, well then that makes more sense, right? We've seen that happen a number of times with our clients, that just, it goes, oh, it just gives me back my time. So anyways, no, I appreciate you kind of going through that.
Want to minimize your tax liability.
Yeah.
100%.
Now let's go to like trademarks, right? So trademarks is interesting. So what's the lowest hanging fruit there with trademarks for businesses? You mentioned, some marketing, you mentioned some there, but like walk us through just the value you said, of the trademark piece of it, and just how much time and effort is needed to get all that going with a team like yourself.
Sure. Every business, unless you're selling widgets or you have the cure for cancer, um, every business needs to trademark their goods or services. It's just kind of a must, because number one, if you don't, somebody could infringe on your mark and you really don't have a lot you can do about it. So, for example, if I'm selling um, Steve's supplements and all of a sudden someone comes up with Steve's vitamin B and I didn't trademark Steve's, I you're SOL. You're just screwed. And so it's what we've done is we have a program called Total TM, and it's a flat fee, but we do the same trademark search and really prosecution protocol that a large law firm would do at a portion of the price. And why that's important is because you can go and file the USPTO, which is a trademark office, even has a program or that you can go and figure out how to file it yourself. But you could get yourself, number one, you could do it wrong and get yourself sued from a potential competitor, if you don't do it right. And number two is you really don't know where you stand in priority or marketing position if you don't clear your brand. And so, say you've been selling for a while, you get a trademark, someone's in the way, you had no idea, but you're really going to not have an idea if you don't do a full search. So it's really important, and that's really very reasonable. It's the total investment is a couple $1,000s for a trademark, for the entire process, doing it right. And so that's kind of the first step. So what happens if someone infringes on your trademark, or what happens if you didn't have priority, or there's a whole bunch of other things where if you can't clear your brand and your brand can't stay cleared, meaning someone isn't stepping on it and you don't do something about it, that is really going to, everyone's buying your goods or services, regardless of how good they are or not good they are. They're buying your services because they can identify your brand. And so if your brand is not protected or mired in controversy, that's going to just be unless, again, if you found the cure for cancer, well, who cares what it's called? And you can name it something else. But for the rest of us, brand is everything. And so they say brand is everything, everything is brand. That's what marketers say.
Excellent.
So
we're running out of time, Stephen. Are you ready for the quick lightning round?
And then what we like about it is we get to know the company through protecting the brand. And then we kind of build out those services.
Excellent. You ready for the lightning round?
I'm sorry, what?
You ready for the lightning round?
Yeah, sure, for sure.
All right. Number one book you recommended in the past year.
What'd you say? I'm sorry.
Number one book you've recommended the most in the past year.
The number one book The Zen of Business is a book that my friend wrote. It's about really, we all get stressed out all the time while working on building businesses. It's really how to take a perspective and step back, and you can actually build a better business by taking some breaths and being Zen about it.
Got it. Awesome. Number one way you're using ChatGPT.
ChatGPT I'm using it mostly in legal, to find case law. I'm finding the thing that lawyers do is they find analogous situations. That's our jobs. And I've never been able to find it easier than using ChatGPT.
Excellent.
Go on.
Perfect. Very last question because we're out of time. After all your success, Stephen, and helping all the people you've helped, how do you best stay centered in your values and stay charged up to reach even higher heights?
Great question. Every client I have, every week, I sit back and I reflect on what I learned through that experience, and through kind of looking at my experience and not just saying, all right, what's about the next one, really focused on what I've learned every day. I can become a better attorney and a better business counselor and a better person.
Awesome. Stephen Weigler, it's been more than a pleasure having the show, and I encourage you to keep using the gifts and talents to help businesses become sellable, protect them with their trademark, protect them and help them build out anything and everything that can be associated with entity and owner structure and privacy. I gave you an anti-counterfeiting here. You have Amazon brand registry, trade secret protection, e-commerce law, intellectual property. I mean, so much here. You guys want to go to emergecounsel.com. Stephen, thank you for being on the show. And I also want to thank all of our listeners for listening to another episode of the Built to Billions podcast. Also streaming on Capital Gains Tax Solutions podcast and YouTube channels. Hey, we're here for you to scale from millions to billions. We give more, all of it away to help MVPs. If you have a large exit coming up, multi-million-dollar gains, business, Bitcoin, real estate, any asset of any kind, and you want to be able to defer the capital gains tax, not using a 1031 exchange, you want to go to capitalgainstaxsolutions.com. It's capitalgainstaxsolutions.com to get started, get the free ebook and all of the things. Appreciate everyone listening or watching, and we'll talk to you again soon. Bye now.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.